Yo, what up everyone? This is going to be a in-depth video recap going over some trades that I took, along with some trades that we took in my Discord community with some psychology, market context, and a trade I took based off of reading the tape. What I saw and how I saw it is what I'm going to show you guys. And I will say it's very important to journal all of your trades and review them because some of the trades that I took are comparable to similar action that we saw earlier in the week, even in the previous video recap that I made. But before we get into those trades, if you haven't already followed me on Instagram at Ameritrade, I'm going to link it in the description below. I post daily trading recaps on here, along with very good trading tips and tricks that I guarantee you aren't going to find anywhere else. The link for this will be in the description below. Definitely go follow it. You're missing out if you are not. But now let's get right into these trades. Boeing's the first trade I took. This was on Wednesday, January 12th. To get context, let's go over the pre-market plan. I post these every single day in the Discord for Trade course members, the setups I'm looking out for, levels I'm looking to trade around. The first one was Boeing, and what I liked about this was we were creating demand at the 214.86 area that I said it will be validated if we get a strong move up with heavy volume, preferably in the first hour. I'm watching for a break above the 219 level to play calls. Once above, I'm looking to target 225. And I said a strong Dow will support this. I also have a strong hate relationship with BA because this thing fake breaks out a lot of the times and it plays a lot of games. So here's that downtrend line. After 2 weeks, we made a nice move up. I like the volume patterns that we started to see. And from last Wednesday to the current week on Tuesday, we were consolidating in a very tight range, and if we did get a rally on the morning gap up on Boeing and the market itself, this would have validated as a proper demand zone if we could get a strong move and buyers really prove themselves. So going to a 1 minute chart with that context, I really needed to see strong volume and buyers prove themselves in the first hour of the market open. The first 15 minutes was lower volume. It was very tight, and we really weren't doing anything, despite the Dow, pull this up here, was also really not doing much. It was consolidating, having a hard time to break out. Now, as a trader, it's very important for two things. Come up with your levels of interest and use price and volume to validate and give you your when to enter and your why to enter. Again, come up with your levels of interest. For me, it's support, resistance, or even better, supply or demand. And then I use price and volume to gauge the reaction at that area. And it gives me if I'm putting a valid trade on or if I should stay sidelined and not put a trade on if there isn't enough interest in the market. Second thing, as a trader, you must be able to react when you get your entry signals or when something jumps out at you. If you hesitate, you take too long to enter, you are going to skew your risk to reward, and I guarantee you're going to hurt yourself on the back end of the trade if it does not work out immediately in your favor. So as soon as you get your signal, enter, do not hesitate. Less thinking is more, in my opinion, in the market. So here's our 219 level. It was very flat prior to that. And 948, we got a nice green candle up. And then 219, we got another strong push above 219 at 949. Now, I recorded this on the tape, and we saw some very convincing signs of buyers above 219. I'm going to add that to the tape reading course. I don't want to go too much into detail just yet. But we broke above 219, and that was your confirmation, at least for me, to get long with a stop below 218. I was risking about $1. Now, in this case, my target was this 225 area, but to be realistic, watching the Dow and watching the previous price action, it really wasn't going to have a straight shot up 5 points on Boeing to 225. So I had to be a little realistic with the market and use intraday clues, what I like to call it, to figure out where I could enter to protect myself. So as soon as we got above this 220.75 area, I said I'm scaling some strength here. We had a clean 219 break, and I recommend scaling into some strength. Now that's about 2-to-1 risk to reward from that 219 entry. I just did not like how we were consolidating right here at the 220.75 area, pulling back down below 220, and I was comfortable taking some profits off the table after a quick $2 rally in 3 or 4 minutes. Now at this point, I boost my stop up, It's now above 219. And as soon as we start failing like this at 221, the Dow, this is why I love using market confirmation when I'm trading in equity. It's a very simple but useful tip. If you are trading an equity that has a large weight in an index itself, for example, Boeing is a Dow component, is a heavy weight, or it's not that heavy. I think it's like maybe fifth in the Dow or something like that. Don't quote me. But it is a Dow stock. As soon as the Dow started stalling out and started selling off, look what happened to Boeing. It started selling off with it. So these charts are very identical. Good tip is to use market confirmation when you are trading an equity that does not show relative strength or weakness. I got some out at 221 again. I had a 235 entry and exit at 275 when we were stalling out on the 220.75 area. So a quick 40 cents on the contracts. And then I scaled some more into strength at 335 when we failed to stay above 221. And now the trade can never go wrong, red on me. I said Boeing is slowly pulling back. If you took profits off the table, pullbacks should not scare you. I was only in 10% of my position. And I plan to sell if it gets below 219. As soon as we hit my stop below 219, I got out on the remaining 10% of my contracts. Again, in this quick rally, I'm out 90% of my position. I protect myself. It's called trade management. We pull back and I sell right where I entered for a little bit below break even on the 10% remaining of my contracts. And this trade yielded me a little over 20% in a very short amount of time. Contracts went up about 50% on that quick move up. You're never going to buy at the lows or sell at the highs, but it was a very simple trade and clean analysis. Now, the next setup, which I personally did not take, I'm going to explain why I didn't take it, was on the S&P 500. You all know this is my favorite instrument to trade. So what happened here was, just like the Dow, just like Boeing, we were very choppy in the first 15, 25 minutes or so, where we caught a bid off of VWAP and rallied. I did not participate in that rally. We did have supply in this area right here that we did, once we broke above, invalidated it, and then we started selling off once we did break above it, and in my opinion was a complete trap for the bulls. So then the market started selling off, and this was like somewhat of a falling knife where we were aggressively selling off right into a key area of demand. Now, this was in the pre-market plan, and I honestly was looking to get long at this zone. Let me pull this up here. Two things I'm watching for was a move above 4721. I'm open to playing calls. We got above 4721, rallied about 20 points and failed. But like I said, I wasn't a fan of that action, so I didn't take it. And then scenario number two was a pullback into the 4701 demand to pre-market lows to potentially play calls. So again, I come up with my levels of interest, and depending on what price and volume does, gives me my reason to enter and gives me my where to enter or when to enter. So I didn't like trying to catch this falling knife. It looked, in my opinion, very weak. There really wasn't any clean volume patterns either. It was just a move into demand and then a quick bounce up. And we rallied about 20 or so points out of the zone. I did not participate in that rally. I know a bunch of members did. But sometimes your setups trigger, and if it doesn't look quality to you or it doesn't fit your criteria, it's okay to miss that move. There will be another trade tomorrow. The market will be here in 2 days from now. 5 minutes after you didn't enter, the market may present an opportunity that was better than what you thought originally wasn't good. So if you miss a setup that you planned out for, it's okay. The market will always be here. Clean move off of that. I just really didn't see a proper reason to enter there. Now for Thursday's action on the S&P 500, the pre-market plan had two possible scenarios. The first area of interest was this yellow line, the 4729 area. I considered it resistance. It really wasn't supply, but because I had it as an area, I considered it as a zone of supply. That if I wanted to be a buyer, we must break above it or create strong demand above it. If it was true, I was going to be focusing on calls. However, if that did not hold and we did sell off from it, we had that 4701 and a half demand zone from yesterday that held. And if that does not hold, I'm open to playing shorts, depending on the context, into the 4675 and then 4661 demand. So going to this chart, now that we have our levels of interest, again, This is the zone that we bounced off yesterday, the 4701, important reference area for today. Now, we opened up right at that 4729 area, and we really failed to move out of this. Yes, we were above it, but price really failed to move higher despite consolidating. In fact, this was creating supply if we did drop. Then the market started to drop, and this is where the interesting thing comes into play. I said ES and NQ, very heavy selling pressure. There was a large seller at 4720. Once we get below demand, it opens the door for a further sell-off. And then this was the picture of the aggressive seller. Again, I just added, or by the time you watch this video, maybe like another day or two, and a full tape reading section will be added to the A to Z course. So be on the lookout for that. So it's going to explain it a little more, but we identified a very aggressive large seller, similar to what we saw in the previous recap video, 303 lots, 44, 41, and 40 lots. This was about a 400 and then we had a 36 below it and then 62. So this was about a 600 lot sell order at 10:12 Eastern, 9:12 Central Time when the market was selling off like this. So with this context, in real time, supply was forming. It was not formed yet because we really need sellers to close it strong to the downside. And we identified a very large seller at this blue line here at 4720. Now, with this seller priced into the market, it comes down to effort versus reward. Put yourself in the perspective of a very large 600 lot, let's just call it, seller in the market. 600 lots on the S&P is a very large participant. It's someone with a very, very fat pocket, extremely large. So if we're a seller in the market, we obviously want to show effort in bringing the market lower, because if we show effort and the market does result lower, that's going to result in a large reward, aka profit. So as we start selling off, the market moves lower about 8 points, where we slowly catch a bid. Now this was at the point NASDAQ was selling off from supply as well. As you can see, NASDAQ, aggressive sell-off straight from supply, down about 200 points immediately in an hour period off of that imbalance. QQQ puts absolutely exploded. Now at this time on the S&P, where we identified that very large seller, I'm going to go to a 1 minute. Look what happens. The market tries to move up, and think about it. You can see it obviously with the volume down here. We had a very large participant in the market. We come back up. If we were a seller at 4720, we're going to do everything in our power to stop the market from coming above and putting pressure on our short position, because if we had to exit our position, we would have to buy to cover, and that would explode the market even more, especially with a very large position like that. So we come up to this level, and this immediately acts as resistance. Honestly, this looked very bullish at this point. As soon as 10:30 hit, the market rallied about 5 points, and this did look very, very bullish. I will not lie, and I was watching to play SPY calls if we did get above VWAP and we found some buyers at 4724. I was watching to play SPY calls. Now, at this point, the next candle, an immediate rejection with heavy selling pressure. As soon as I saw this, I played the SPY 471 puts. As soon as I saw that, with my stop loss above this high, and then the next minute, another very aggressive move down, heavy volume building. And then the following 2 minutes after this, I sold my full position for a couple of reasons. So after a quick 8-point move in a 2-minute period, after the action that we saw prior to this, I was comfortable with taking it off the table. On top of us breaking the low and failing to continue to move lower, we just consolidated for look how long. I view this as not weakness, not strength, but somewhat of let's see what's going to happen next in the market. And with the velocity and with the size of the trades that I do put on, I'm not comfortable holding for this chop, and I'm not okay with the market, if it did rally like it did earlier, for it to crush my premiums. So with that quick drop, I took a quick 20% return in 2 minutes. I'll take that all day, every day. And this was my mistake, because if I held and I was patient, I really didn't follow my plan. I didn't hold to my target, and I didn't sell at my stop loss, which was all the way up here. Instead, I sold when the market gave me a sign, and I kind of read this sign wrong. I really should have stuck to the plan because this thing dumped right at demand. Risk to reward was perfect, and by the time it came to demand, these contracts exploded, I think like 75%, and would have been a much larger gain. So that's definitely something that I put in my journal and I will work on. I had no reason to sell despite that consolidation, quick drop. And then keep in mind, now we're inside of this 4701 demand. This was the same zone that we bounced at yesterday. So this action, I will not lie, was very, very similar to what we saw yesterday. Look at the last. So look at this action right here. Look at the drop from yesterday right into this demand zone. Look at the drop today. I mean, it's at the same exact high and it's at the same exact low at demand. So yes, maybe I should have looked to enter it long here. I did not because of yesterday's action, but looking back at the chart after the fact, yesterday we bounced at it. So maybe I should have looked to play it long, but I didn't. I had the same mentality of not trying to catch the falling knife like I did yesterday. So I didn't take this long, honestly. It was maybe a trade I should have, but I did not. And I could sit here and say I did, but I did not. Another valid entry, if we didn't get long in that high volume at demand, another valid entry could have been like we saw in the last recap video when we put a higher low at the demand zone, maybe above this high, and look what happens. I wish I saw this in real time. I was not at my office at this point. I stepped away for 10, 15 minutes. And by the time I got back, this thing was dumping. So bounced off demand perfectly. A bunch of members took this long and sold right at VWAP and right where we identified that large seller yesterday. And the contracts went up 80% in 30 minutes. So quick, clean move, completely stress-free. Now, another trade you could have looked to put on, again, I did not spot this in real time. I got back to my office and saw the market dumping, was once we came back, same analysis as earlier. If we're a seller, we're going to do everything in our power to not put the market above where we got short at. Came back up to where that seller was, above VWAP, and that acted as a serious area of resistance. Now, that's what I said. Remember that seller from earlier at 4720? Look what happens to price. Immediate rejection at it and complete sell-off. Now, this was earlier. Show you this, that when we did sell off, in the Discord, I put this trade idea that we bounced off demand perfectly. We were trying to create demand on the way up, that if this did not hold, this 4701, especially this was in the pre-market plan as well, if it does not hold, I'm going to be open to playing shorts, targeting that 4675 demand zone. And immediately right after this, again, I did not take this move. I wish I did. I was not at my office at this point. We sold off below this demand zone and the market aggressively moved down. And the amount of messages I got today was actually overwhelming from the traders that took this trade and made 4 or 5 figures off of the setup. Crazy thing to see, and I appreciate everybody that sends me the trades that they take, good and bad. But the amount of members that took really good trades off of that quick idea was unreal. Quick sell-off below that demand. Heavy seller identified, valid short, target the 4675 area. You could sell right here. Then the market tried moving up, just like we saw earlier. The market tried moving up, acted as 4700 resistance, came back down to demand, and invalidated a bunch of zones lower. It was an all-day sell-off. When you see the market acting like this, in my opinion, with lower lows, lower highs, a heavy seller identified in the market, NASDAQ rejecting supply, other equities weak. These are just things you add to the picture of the context. When you see that, in my opinion, a reason why I didn't take this long was I don't want to catch a falling knife. I'd rather let it bounce off demand. If I miss that first bounce, I could always get in if it retests it or buyers prove to be strong. But on the first test after such weakness, especially at all these other demand zones, again, these are just lines. For some of them, they are technically zones, but I just mark lines at the start of it instead of having 100 different rectangles on my charts. But instead of trying to catch a falling knife, let it play out. The market's bearish, heavy selling pressure, heavy seller, lower lows, lower highs. In my opinion, no reason to be a first buyer at demand. let it develop, let it give you clues, and then you could get long. On days like this, you should be focusing only on the short side with such weak context. Last setup on Thursday was Ford. Now, I normally don't chart, trade, or even look at this name, but a member posted it. The setup looked way too good. So shout out to him. You know who you are if you're watching this. It's good to see other members being able to identify these setups on their own from what they learn in the Discord and the course. Sometimes I miss certain setups and don't see it, but this just looked way too good not to post. So very high volume. We were creating demand on the way up, and we had a key level at 25. I'll be watching for a breakout to play above as long as we identify some interest in the market. I was also watching for a potential pullback. Now, this chart is identical to Boeing. This is why looking back at your past trades and your past charts with the current conditions comes into play. Nice chart pattern, nice wedge or triangle with resistance, key level, nice downtrend line, and some nice volume identified and creating demand on the way up. So with that context, now it's our job just to see what price does at our important reference areas and act accordingly. Now, I will say, I did not take this trade either. On Thursday, I really struggled with my emotions and being attached to the market and being in fine tune with it. I really wasn't deeply involved with it. I had other things going on and my mentality really wasn't connected too well. And I've noticed in the past when it's like that, I force setups and I get in too late and it really makes me lose more than win. So this analysis worked out perfectly. It was a great trade. I know other members capitalized on it, but I really wish I could sit here and say I took it and I made a lot of money off of it because I know I would have if I did take it, but I just struggled with execution on Thursday. And right now recording this, it bothers me because this was an A+ perfect setup. As traders, including myself, I'm not perfect. I miss setups. My emotions keep me from entering some trades. My emotions make me take losing trades sometimes as well. Just trying to be transparent and say I'm not perfect as a trader. I really wish I could say I was in this trade. But just like Boeing, break above the key level, heavy volume established. The time and sales was very nice. The level 2 was very nice. Took out some very heavy passive sellers. And the market broke above with strong volume above 25. I got this on recording as well. I will put the example in the tape reading sections. Broke above 25. Again, it's a smaller price stock, so you have to look at it as a percentage-wise, not so much as a dollar-wise. This was a quick 40-cent, 50-cent move up without pulling back. Then we pulled back perfectly into the $25 mark. That breakout level acted as support. This could have been another area for you to possibly get long as well. And then this thing rallied another $1.80 or so cents from that level. And it was just a clean move. It was stress-free. If you got long at 25 bucks, this pullback, as long as you practice proper risk management and trade management, should not scare you. You should still be in the trade. And the contracts exploded. They were very, very cheap. Gives you the ability to play a larger size because they are so cheap, or just play the equity itself and get a quick 80-cent move on, 5,000 contracts or whatever, 10,000 contracts on a quick move like that. So multiple ways to play it. Follow your plan. A pullback should not scare you. If you're entering at 25 bucks, your stop loss, let's just call it 24.70, 24.80. You're risking about 30 cents to make 60, 75 cents. Pretty good risk to reward. Volume was high, quality setup, nice move. Some members made even 5 figures off of this trade. So clean movement on that. I'm glad others took when I didn't, but it annoys me just looking at this chart right now. There will always be other setups, and the market is not going anywhere. If you miss a trade, you hesitated to enter, you didn't execute properly, but your analysis was correct, brush it off. It's a win in my book. Focus on the next setup. The next setup, whether it be 2 minutes from now, whether it be tomorrow, whether it be next week, could be 100 times better than that setup that you wish you have taken. And on that note, I'm going to end the video. If you learned something, please drop a like, comment if you have any questions, and be sure to check out the links in the description below. I offer a very in-depth and educational course that will come with access to the Discord at no extra charge. By the time you're seeing this video, maybe in 3 more days, There will be a full tape reading section to the A to Z course, and I haven't decided or not if I am going to raise the prices or not.